With gold having recently hit a new all-time high, many viewers are wondering, what's next for the price of gold? To answer this question, I asked two of the smartest gold experts in the world to join me for an exclusive new interview. And in it, you'll hear their predictions for where gold is headed next, the good news and bad news for gold investors today. And perhaps most importantly, you'll get to see the inner workings of a powerful system for investing in gold. A system which has delivered audited gains of 706% for more than 2 decades, crushing the return of gold, the returns of major gold funds, and more than doubling the S&P 500. To be among the first viewers to see this exclusive new interview, head to 2023goldrush.com to sign up for a reminder when we go live. Again, that's 2023goldrush.com. Hi, this is Daniela Cambone, and welcome back to the Daniela Cambone Show here on Stansberry Research. Well, we are already 10 weeks into the banking crisis so far, and we've had 3 regional bank failures that cost the Federal Deposit Insurance Corporation's piggy bank over $35 billion. And now there are rising concerns about the outlook for mid-sized banks. We have a budding policy debate over the future of deposit insurance and fears that commercial real estate loans may be the next source of trouble. Here to talk about this and so much more is Andy Schectman. He is the CEO and founder of Miles Franklin Precious Metals. Andy, so good to finally have you on my show. Welcome.
Thank you for having me, Danielle. It's an honor to be here. I really, really appreciate it.
Well, I was excited to get you on because I've been following your thesis regarding the banking problems. And if I got this right, you feel if we're about to see another one, this really could be the end of mid-sized banks. Talk to me a little bit about your thesis here.
Yeah, well, look, there's no reason for anyone to stay inside of a mid-sized bank right now. I mean, if you look at the facts, when Janet Yellen was being questioned by the House committee on the failure of Signature Bank and Silicon Valley Bank, the representative from Oklahoma asked her, Madam Secretary, look, you guys just bailed out Silicon Valley Bank and Signature Bank, and we were under the impression that that wasn't the way things were supposed to play out after the laws were changed during the Great Financial Crisis, or after the Great Financial Crisis, rather. So am I to assume then that if one of our constituents inside of a regional bank in Oklahoma who has $5 million in that bank and the bank fails, that you're going to make that constituent and the rest of them inside of these regional banks whole? And she said, no, I won't. And he looked at her with a puzzled look and said, well, why is that? And she said, listen, it will take an uber majority of the FOMC, being the Fed, the FDIC, myself, and the president, in order to determine if these banks are too systemic to be allowed to fail or not. In other words, she's rendering herself the judge, the jury, and the executioner. But more important than that, that was the fuse that was lit under the banks, wondering, is the bank that I've trusted forever, this bank that helped me start my small business, this bank where I have my family's money, my kids' 529 plan, this bank that I know the CEO, I know the owners, I've worked with them my whole life. Maybe my family has, and my father and my grandfather. These regional banks, which represent literally 70% of all the small business loans, close to 70% of all the commercial real estate leases and loans. These banks have been the cornerstone, the backbone of the small business in the United States, which traditionally could be as much as 40% of GDP, the small businesses, where loans were being made on relationships, not as much balance sheet and business plan, but relationships and an understanding of the community. And these banks now have a fuse lit underneath them, not only because Janet said, hey, we're not going to bail them out unless we deem them to be too systemic to fail, but equally as troubling, you have the Federal Reserve, in my opinion, aiding and abetting the exodus from these banks. When you look at the reverse repo market paying over 5% right now, where all of the money market funds seem to be going, you can take your money out of a regional bank that is too big to fail, or too small to fail, rather, or not too big to fail, put it all into a large size commercial bank with daily liquidity in the money market that is inside of the reverse repo market, which is more or less guaranteed by the Fed, versus leaving it in the bank, which can fail. The best you're going to do in a CD will rival that, maybe 4.5%, 5%, but you're locked in for as long as a year. So you have no daily liquidity. You're in a bank that can fail. And as far as I'm concerned, the environment that we are seeing with rates rising and the Fed allowing the money markets to invest in the overnight reverse repo market is aiding and abetting. This is a trend that is just beginning, as far as I'm concerned. And it almost as if the Fed wants this to happen. The powers that be want this to happen, because if they wanted to put a brakes on all of the money leaving the regional banks, they could just disallow the ability for the money markets to park their money inside the overnight reverse repo market.
Why do you think the Fed would want this to happen? And two, if you think this might be the end of regional banks, what does that mean for the ecosystem of banking as a whole here, Andy? I mean, how vital are they to the banking system? Can we live without them?
Well, it's an interesting question, Danielle. And you know, I try and focus on facts, right? And a lot of the stuff that I've been talking about over the years is rooted in facts, but you get to that point where you have to kind of connect the dots. And, you know, there's a lady named Lael Brainerd who used to be at the Treasury. Then when she ran for the head of the Fed, I thought she would win because I didn't think they would reappoint Powell, who was a Trump appointee. And I thought for sure she would win. And in reading her thesis, you know, she's a modern monetary theorist, and her whole idea is to get rid of the banks, the commercial banks included, and go directly to and from, in terms of monetary policy, directly from the Federal Reserve and a central bank digital currency. Now, I'm not saying that this is what the game plan is, but take a look at it from a step back. She was at the Treasury. She became second in charge at the Fed, and now she is leading up an economic advisory committee to the White House. And, you know, her whole theory is get rid of the banks. So the Bank of International Settlements, the most powerful bank in the world, has told everyone that by 2025, every country must have an operational CBDC. Look, if you're going to issue a CBDC and want mass adoption, I think it's far easier to implement that shotgun style to 4 or 5 large banks than to 5,000 regional banks. And, you know, it just becomes, look, could they actually be listening to Miss Brainerd's thesis and following it and figuring, hey, well, if we don't get rid of the regional banks, then the rollout of the CBDC will not be as successful, will not have the adoption rate that it would if it were just issued to 4 or 5 banks. Now, if you really want to take it a step further, and again, a lot of this is supposition, if you look at the derivative exposure of the large, too big to fail banks, they're extraordinary. I mean, JP Morgan has over 50 trillion in derivatives, and Danielle, a trillion seconds ago was 31,688 years ago. The numbers are so extraordinary, it's almost impossible to comprehend. And if those banks were to fail after the majority of the people have left the regional banks and have been penned into a handful of commercial banks, you blow up one of those commercial banks, it drags down the whole system. But fear not, because here is the government coming in on a white horse with the CBDC just in time to make everybody whole. Now, is this going to happen? I don't know if it's going to happen, but it's no more crazy to say that than to say, why did President Biden just nominate a man named Jared Bernstein to head up another economic advisory committee at the White House? And his whole thesis is to replace the dollar as the world reserve standard. In fact, a report that he wrote, an op-ed report in the New York Times in 2014, is called King Dollar No More, where he urges that the U.S. must actively take steps to remove the dollar as the world reserve currency. So Does that mean that's the path we're heading on? I don't know, but I'm just saying there are a lot of things right now.
But Andy, how does that make any sense? Why would Biden want someone internally that believes in that theory? Isn't the government and the Federal Reserve trying at all costs to keep the dollar numero uno?
Well, maybe they are, maybe they aren't, Danielle. You know, everyone focuses on this $31 trillion debt, which ignores the elephant in the room. And that elephant in the room is Social Security, Medicaid, Medicare, and government military pensions. The 2022 budget or balance sheet just came out showing a $76 trillion shortfall in Social Security, which we're told will be bankrupt by Reuters in 10 years. When you add Social Security, government military pensions, and Medicare and Medicaid to the $31 trillion debt, you're over $150 trillion by their own admissions. It's almost as if they're looking for a villain, and that villain would be Putin, Xi Jinping, OPEC, and all of the countries moving away from the dollar. But you have to give them reason to de-dollarize, to move away from the system, because how do you pay this off? How do you pay this off in an environment where interest rates are rising? You never can. It's either inflate or default. So, you know.
I mean, this is very interesting. It's the first time I've had a guest on saying that the US would almost want de-dollarization.
Yeah. Well, look, when they came out, Daniela, and they said it's Putin's inflation, I said, that's it. That's it. They're looking for a villain. If you've studied Austrian economics for more than 30 seconds, you will know that each and every single time inflation is a monetary event, an increase in the money supply. And when you realize that we printed more money in the last 4 years than in the history of the country before it, and we're trying to say that inflation is Putin's fault, it's finding a villain. So you take it a step further. How do you pay off this insurmountable debt in a rising interest rate environment instead of falling on the sword and being written about in history books for destroying the American dream and the American way of life through brain-dead monetary policy? It's those guys. They did it, Xi Jinping and Putin and OPEC and the rest of the world. They did it to us by stripping the dollar of its world reserve standard. And if you look at the moves that we should be clinging on to, as you mentioned, we should be doing everything we can to keep that, to have transparency, to earn the world's trust. It seems in every single step we are doing the opposite of that. And it all focuses, again, on a villain. And it was those people that made us do this. And this is why we ended up where we are. And it's not what we did. It's not the inflation that we created and the distortions that we created through suppression of interest rates and throwing money at the world every single chance we get. I think they realize they're in between a rock and a hard place. And as my mentor, Richard Russell, always said, many years before any of this happened, it's inflate or die. There is no way out of this mess. It's either inflation or default.
What do you say? Well, the countries that are dumping the US dollars, someone argued, don't really matter on a geopolitical front. If you look at who's dumping the US dollars, right? It's not European countries, Andy.
So I'm glad that you say that. Rick Rule is a good friend of mine, and he mentions this too. He points to the euro. Look, the euro didn't work. You had countries moving in different directions. And when you talk about the countries that are dumping dollars, okay, fine. It's like a game of Jenga. Each piece you pull out is another piece that destabilizes the tower until the whole thing falls over. And you're right. When you see Brazil saying we're going to trade only in yuan with China, when you see India trading with Russia in rupee or in ruble, when you see all of these countries striking deals, yes, it doesn't matter in and of themselves. These little pieces are not as important as all of them put together. But I ask people all the time, what is the glue that makes the dollar the world reserve currency? And nobody ever knows. No one ever talks about it. It is the protection of the Saudi kingdom that gives the dollar its hegemony. It was the deal struck in 1974 to the Saudi kingdom. We're going to protect you, but for that, you're going to denominate oil globally in dollars, period. And OPEC adopted that. Well, what has happened over the last several years, if you take a step back, it is very easy to see that pieces are being put into place. And this formation, this unity of countries that is joining together against the West is becoming incredibly formidable. And when you talk about Brazil, Russia, China, India, South Africa, and the 19 countries, including Saudi Arabia, who have formally applied to the BRICS,
Right.
things start to change. And when you realize Saudi Arabia not only formally applied to the BRICS, but every one of the OPEC countries are on the Belt Road Initiative, the largest infrastructure project in human history. 150 plus countries have signed on to the Belt Road, and the West is not on it. So not only are they on the Belt Road with the rest of the OPEC countries, they've formally applied to BRICS. They just formally applied to the Shanghai Cooperation Organization, which in and of itself represents nearly 50% of all human population. And it is the largest regional military and financial organization in the world. So between the BRICS, the Shanghai Cooperation Organization, the Belt Road Initiative, the Eurasian Economic Union, and also the fact that in Davos, the folks, the Saudi finance minister said, we're open to taking other currencies like that. If they dump the dollar as the sole settlement currency, because of all of the things that we are doing, including going green, when 80% of the world that they are aligning themselves with are not, it becomes a real problem real fast. So yes, the countries dumping dollars now are not as relevant as it will be when Saudi Arabia and OPEC say we've decided to take perhaps the new BRICS settlement currency, which we are told will be pegged to commodities. Or perhaps it's the Eurasian Economic, the Shanghai Cooperation Organization settlement currency that Alistair McLeod believes will be pegged to gold, which is the only other tier one reserve asset in the world as deemed by the Bank of International Settlements in 2019. And when that happens, the de-dollarization will go from a trickle to an all-out flood. And that's where I get real nervous, is that the steps that we are making are incentivizing the rest of the world to this coalition, the sanctioning of assets and the bullying that we are doing, not to mention the things that we're doing inside the country to destabilize the whole system, is further incentivizing the world to look elsewhere. And I think you're right. Little by little, they don't make as much of an impact. Put them all together and then flip the switch and say, thanks for the memories, folks, but you guys are going green and the rest of the world isn't. We're aligning ourselves with Russia, who we signed a military agreement with the day that you folks left Afghanistan in a less than harmonious way. We're now part of the Shanghai Cooperation Organization, the BRICS Union, and the Belt Road Initiative, and all of these folks that represent the majority of human population. Well, you know what? They're not going green. And that coalition is very formidable.
A few points here. Very well said, Andy. Well, that's why I found it so interesting that you were the first to bring up, well, maybe the U.S. does want this to happen. Because one thing I kept pushing back to the experts that come on my show is that it's hard to believe that the U.S. can't stop it, that they don't have tools in their kit to say, we see what's happening, we see the rise of the BRICS, and we're going to put an end to this. So that's why, getting back to your point, is why do they want it to happen?
Because we've dug ourselves a hole too big to ever get out of. We've milked as much out of the system as we possibly can. How do you pay off nearly $200 trillion in debt? Remember, trillion seconds ago, 31,688 years ago. Either you fall on the sword and take blame for mismanagement of the world reserve currency, or you find a villain. And like I said, when they blame Putin for inflation, it became very obvious to me that they are relying upon the fact, the ignorance of the American public that doesn't understand what inflation is. Look, when you distort the supply chains, sure, you're going to have price inflation, but inflation is a monetary event. It's an increase in the money supply. And that's the only tool that the Fed has ever used. Throw more money at it, suppress interest rates. And the distortions and the misallocations of resources and capital that has created, we've crossed the Rubicon. We'll never be able to dig our way out of that. How do you do that when every time any politician talks about reining in, quantitatively tightening, stopping the entitlement, stopping the madness, they're hit over the head with a stick? And I think yeah.
Sorry.
No, I'm just saying, I just think that we've reached a point where it is either inflate or default. And I think they're choosing the third option, which is find a villain to blame it all on for the destruction of the system. And
whether it's the BRIC or China will have its own, super reserve currency that will overtake the US dollar. How likely, you mentioned it being commodity backed, how likely do you feel it will be backed by gold? And is this the reason that we're seeing central bank gold buying at levels we've never seen?
Yeah, well, let's go back to 2017 to answer that question. In 2017, Danielle, it was a tough time to own a precious metals company. We were at the tail end of a 6-year bear market.
That's
And
right.
for a few years prior to that, the German Bundesbank was making noise, give us back our gold. We want our gold. Finally, in 2017, they made a really big stink of it. And they said, we want all our gold that the US Federal Reserve is holding. We want it sent back. And within a few weeks of that happening, the Dutch National Bank, the Bank of
That's
Austria,
right.
all of these banks, Poland, the Czech National Bank, all of these banks said, we want our gold back too. And the following year, 2018, those banks bought more gold as a group than they did in the 60 years previously combined. Then in 2019, the BIS reclassifies gold and levies it to a standard that is a high quality liquid asset, in essence, tier one, after 80 years nearly of it only being US dollars. And when you look at the fact that the central banks of the world, who don't not only have the most money, they're closest to the information. You're right. They've bought more gold in the last 18 months than ever before. And countries like Turkey, who have formally applied to BRICS, they're the largest producer or accumulator of gold in the last 18 months. And so I do believe when you look at the success of the Chinese digital yuan that they've rolled out for over 4 years now, they did it at the Beijing Olympics. It's settling the majority of the contracts on the Belt Road. How do you make it work? This is exactly how you make it work. You use distributed ledger technology like the rails of the digital yuan, and you peg commodities to it, just like the BRICS nations have told us they're going to do. And I do believe gold will be the cornerstone of it, because there is no reason in the world that the central banks would be accumulating it as copiously as they are and reclassifying it if it weren't going to be the cornerstone, I think, of what comes next.
I was going to say, except Canada, which got rid of all their gold. But that's a topic for another day. Andy, obviously, you're with a bullion dealer. So people are going to say, well, Andy, of course you believe that gold is a solution in this. And I want to talk to you a little bit about why you think it's so vital to own gold here. And one statistic I want to bring up, is it true you added 13,000 clients in 40 days, which you normally see in 3 years?
It is. We added 13, we're closer to 14,000 in just over 40 days. It is. And there is an awakening in this country. And maybe it has something to do with the fact that you're getting these states like Texas and Missouri and Idaho and Wyoming and all of these states that are 8 or 9 of them that are allowing gold and silver to be classified as legal tender within the states for all debts, public and private. There is a growing awareness, a growing awakening. And, it's one thing, Daniela, for me to say, hey, the stock market is shaky, the bond market is shaky, the real estate market is shaky. They're all inversely correlated to a rise in interest rates. It's another thing to say that the money that you're keeping in the bank is at tremendous risk. And, I think people are waking up to that. Look, the Federal Reserve lent the FDIC $174 billion last month. I mean, do people understand that the FDIC only had $128 billion in assets at the end of 2022? How do they back $9 trillion in deposits? That doesn't even talk about the money at the commercial banks. They don't. And a lot of people are waking up to this, including the legislatures in these states. Danielle, one of the things that has made me successful is being objective, and I try to shoot holes in my argument. To me, gold is not an investment, and I've been very clear on that my whole YouTube career. To me, gold is wealth, period. I've accumulated it every 2 weeks for 33 years. I've never missed a 2-week period. That was the promise I made to my father when he and I started this company 30 plus years ago. It's wealth to me. I've never sold it based upon fear and the sky is falling. But for the first time in my life, I'm very scared about the world my children are growing up in. And I think when you look at gold, it has lived through 2 world wars, German hyperinflation, the Great Depression, every pandemic, and anything the world has ever thrown at it. And the central banks, who are not only the most sophisticated, well-funded, but well-informed traders on the planet, find it relevant enough to buy more over the last 18 months than any time in history, using the suppression of COMEX to run cover for it. And the drawdown off of COMEX and the LBMA is startling when you see how much metal is being pulled off quietly using price suppression to run cover for it. And, maybe I'm one of the few people who has the courage to say these things publicly, but I believe it in my soul, truly. And I think it's for people to do their own due diligence and come up with their own conclusion. And this has been my mission for the last 4 years. It's all I focused on. And the more I see and the more I read and the more I witness, it just becomes more and more to me probable that somewhere between what is going to be reality and what I think is going to happen is going to happen.
I just want to get your thoughts on silver because I thought you had an interesting take on what's going on at the U.S. Mint, where you say, look, you love the U.S. Mint, but you feel that something fishy is going on with silver, with the premiums we've been seeing. They say that production's going smoothly, but yet we see these insane premiums on silver products. Why? And what do you think's up?
Look, first of all, when you realize, and I'll talk about the U.S. Mint in a minute, over 5% of the COMEX silver left the registered category on May 10th. You're down below 30 million ounces for the first time since 2017 and only the third time ever. And, with registered categories below 30 million, if you realize that we've seen 120 million ounces leave the COMEX in silver over the last, since the beginning of 2021. In the last 2 months, we've seen about 230 or 40 million ounces of silver being taken off of the London Metals Exchange in what's called exchange for physical, where they take the COMEX contracts and exchange them for physical over there. These are the most sophisticated traders in the world draining the exchanges. The big money is accumulating silver. As far as the U.S. Mint is concerned, it baffles me. They made 14 million silver eagles last year. They have the capacity to make 3 or 4 times that. I've seen it. When I am able to buy coins from South Africa, Australia, Austria, the United Kingdom, easier than I can from the U.S. Mint, something isn't right. When Janet Yellen gets on the Mint webpage and says, we've ramped up production, and yet they're only making 14 million. And if you look at what they've done this year, they're projected to only make under 12 million. They're doing about 900,000 a month so far. The demand is off the charts. And to see $16 an ounce premium on silver eagles, it's absolutely insane. I don't know what they're doing, to be honest with you. Maybe they're trying to stockpile silver. They realize it is more a strategic metal than it is an industrial metal. And whatever it is, it doesn't make sense because the rest of the mints are far more efficient than the U.S. Mint is. And it's sad because really the majority of people in this country, if they had their druthers, they'd buy silver eagles, which for my whole career, Daniela, were only 50 or 60 cents more than all the coins right now. And they're trading at $11 or $12 more than all of those other coins I mentioned, the Britannia, Krugerrand, Philharmonic, Maple Leaf, and Kangaroo.
Insanity. Andy, I thoroughly enjoyed this conversation. I hope you come back soon because there's so many other things I want to go over with you. But I'll give you the last word. Bring it home for the folks. If you could leave them with one takeaway here.
I guess my one takeaway, Danielle, and first of all, thank you very much for having me. And I'd come back. You don't have to twist my arm. I'll come back anytime you have an open spot. Look, I think the bottom line is this: gold and silver are wealth, and it is they are being accumulated by the most sophisticated traders on the planet who have been using Western suppression to de-dollarize, to accumulate copious amounts of gold and silver, and quite frankly, other hard commodities. And I think that should be your guidepost. The price is not it's not corresponding with the global demand or the retail demand. And I think you have to do what the rest of the world is doing, at least the smart money, and that is to minimize your exposure to dollars. Because as Rick Rule often says, I think we are in an environment where if you are not a contrarian, you will end up being a victim. And I believe that in my soul. So for those people who think I'm talking my book, I truly am not. I don't see a way out of this. And I hope I'm wrong. I got 3 kids, my youngest being 16. So I hope I'm wrong. But unfortunately, I think that we've crossed that line. And now it's about doing all you can to minimize your exposure, not only to the dollar, but to traditional assets that will all be inversely affected when interest rates rise. And I don't think we've even begun to see the end of interest rates rising.
Oh, that's a whole other topic. So you're going to have to come back, Andy. But on that note, I hope you're wrong too. And we'll see you soon, Andy.
I look forward
appreciate
to it.
Your thoughts
You stay well. Thanks for having me.
And thank you for watching. We'll have much more coming your way, so be sure to stay tuned to the Daniela Cambone Show and sign up at danielacambone.com so you don't miss a beat. That's it for me. Thanks for watching.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.